Good morning. I'm Peter Towers. Welcome to Advisory in the Age of ATO Digital Transformation. If you have any questions during the webinar, can you please type your question into chat? And if you're watching this webinar on the live feed that we're making to social media, and you have a question, unfortunately, you won't be able to access me directly, please send me an email, peter@essbiztools.com.au. And if you're watching this webinar at a time more suitable for you with your workload and you have questions, just send me an email, please, peter@essbiztools.com.au. We're looking at a series of events today to look at what's occurred in the 3 years that have elapsed since the then Tax Commissioner, Chris Jordan, made his speech at Xerocon 2022, where he issued a warning to accountants and urged accountants and bookkeepers to implement a trusted advisor service to SME clients. What's happened in the intervening 3 years? And it's worth noting, of course, that based on Chris Jordan's original timetable of 3 to 5 years, there would be substantial changes in the interaction with the tax office, the amount of work that accountants in the tax return preparation phase or the tax lodgement phase, might be a better way of saying it, we're going to be involved with. So today that is 0 to 24 months, isn't it? Because Monday was the anniversary of that 3-year presentation. So is it a reality or a myth, the trusted advisor, when it comes to accountants? We're going to discuss that today. And what SMEs say they want versus what firms deliver is an interesting situation. And we've got some of that which we're going to discuss with you also. And where firms are shifting focus, what's the difference? Some firms have embraced the concept of the trusted advisor. Some were doing it long before Chris Jordan made his presentation. I know that because they're subscribers to ESS BIZTOOLS. And what's the practical next steps to close the gap? Because the research undertaken by the Intuit QuickBooks has clearly indicated there is a gap. And we're going to share with you some of the comments made by a retired partner from Deloitte, an experienced insolvency practitioner, Eddie Senator. And I think you'll find his comments quite interesting. So Intuit QuickBooks produced the SMB Navigator Report 2025, which is a very interesting document that I would urge all accountants and bookkeepers to read. They surveyed 500 small business operators and 400 accountants to get the input that they've disclosed in the report. It's a sizable number of participants in that survey. Eddie Senator is a chartered accountant, an ex-Deloitte partner, who's been writing a number of articles that Accountants Daily have been publishing, where he is casting a critical eye over this whole concept of the services being provided by accountants. And he's really raised the question, are we as a profession performing the role of a trusted advisor? Michael Johnson from Agile Market Intelligence conducted a lot of the research for Intuit QuickBooks, and we've quoted one paragraph of what his comments were in our overall summary, which is available to firms that are receiving promotional material from ESS BIZTOOLS. So let's look at the evolving role of extending services far beyond compliance, because that is the challenge that is being presented to accountants, isn't it? How do we supply those services? Now, I know that many firms are already very busy on the taxation return lodgement side of things. And that's probably why so many firms have outsourced various segments of work to overseas organisations. But SME clients in Australia are needing assistance. The failure rate's the highest it's ever been, according to the Australian Small Business Ombudsman. So what can be done? Role changes are necessary every year with tech and automation, is a comment that was made by Michael Johnson. And Eddie Senator suggests that we need to address what he's calling the trusted advisor myth in some articles that have been published recently in Accountants Daily. So what's the relationship reality that we have at present? Only 15% of the businesses that were surveyed for the overall report produced by QuickBooks viewed accountants as their key strategic partners. Now, let me just give you what the definition of key strategic partners was by Intuit in their report. They are a key partner in our business and our go-to professional for advice. They are extremely valuable to our business growth and success. That's how the SMEs look at firms that they identified as being key strategic partners. And only 15% of that 500 firms identified that they had that type of relationship with their accountant. I'm concerned about that. I don't know what your reaction is. 51% said that they had a valued relationship. And the definition that Intuit QuickBooks used was valued relationships. We have a good relationship with them and they help achieve our financial or compliance commitments. But they aren't necessarily our go-to advisor. Well, I'd ask the question, who do these SMEs go to for financial advice if it's not their accountant? But obviously they have made a decision, 51%. On the survey, 260 odd of those 500 businesses that were interviewed don't discuss the fine detail of their financial affairs with their accountant. Who do they go to? I think that's a great concern. And the next figure will also cause more alarms. 34% of those businesses, those 500 businesses, what's that, about 180 of them, viewed their services as being transactional service. And that transactional relationship was defined as if we have a limited relationship with them. Note the word limited. And they are a service provider who provides a straightforward service and not much further. Now, that might be the taxation return work, of course, but it's still important. Who are these businesses going to then for advice? When I read these figures, I say to myself, if I was still the senior partner of an accounting firm, I'd be saying there's a lot of potential work out there. We just have to promote and talk to clients and to other people. And we're going to hear a little bit later about some of Eddie Senator's comments, and perhaps you need to take that into account when we get there. So ask yourself, what would your firm score if you went around all your clients, or perhaps had an independent person ask them to rate you as to whether you're supplying a key strategic partner service, a valued relationship, or a transactional service? There's 85% there up for play. 420 odd firms were not rating the service at the top level. And I think we need to think very seriously about where that leads. So why only 15%? Well, many relationships remain in that transitional category. The advisory uptake is just 26%, according to the information across those people. There's been limited promotion of broader services based on the results in the QuickBooks survey. SMEs were not aware of the broader services. They didn't know that accountants could do that type of work. I think as a profession, we have a real communication problem because the emphasis has been on taxation for so many years. Many SMEs do not understand that accountants can offer budgeting, cash flow, business planning, key performance indicators, business metrics, creating their charge-out rates, giving critical review throughout the year, weekly, monthly, in offering a real chief financial officer type service. But we need to talk to clients about that. We need to make them aware. Clients are unaware that the profession of accounting can do far more. Now, I know a lot of this because I also run a consulting business. And I talk to a lot of SMEs who come to me because they're wanting to understand how crowdsourced funding equity raising works, or the early stage innovation company. Or they want to make an application, if they can, to gain research and development activities. And some of them have been referred to me by their accountants or bookkeepers. So I've had sole traders come to me and say to me, my accountant sent me on to talk to you about research and development. I said, well, what's your business structure? Oh, it's just me. I said, oh yeah, what's the company name? Oh, I'm not in a company. Well, I said, unfortunately, you cannot claim the research and development tax offset unless you are a company. The answer, why didn't my accountant tell me that? I said, I don't know, but I'm going to talk to your accountant in a nice way, which I did. But that didn't just happen once. Over the last 20 years, that's happened quite often, where people talk to me as SMEs and they're not in the right structure to be able to do things. They're not getting the advice. I think we need to seriously look at that as accountants in supplying our clients. Trust isn't built via infrequent touch points. This was a comment made by Eddie Senator. Now, Eddie's a man that I hadn't really heard about until very recently. I noticed he was a former Deloitte partner, so was one of my brothers for many years. And that was about the only real reaction I originally took. Oh, he's also Deloitte. But he writes some interesting comments, and he's looking at things a little bit different to the way most of us do. I've never been an insolvency practitioner. I don't like the idea of it, to be honest. But I gather Mr. Senator has been for most of his career. And he has passed some critical comments in a number of articles in Accountants Daily about the services and advice that we as professional accountants have been giving clients. And one of the comments he makes is that the tough reality is that trust isn't built through infrequent transactional interactions. Infrequent touch points is what he's getting at. We need to be communicating with clients far more regularly than what a lot of firms are doing. And that's because of the tax situation. I know that. I was the senior partner of an accounting firm where we also prepared a lot of tax returns. But because I'd been a chief financial officer and company secretary of a listed public company, preparing tax returns didn't really turn me on. That's when we started to develop what is now known as ESS BIZTOOls, because we wanted to deliver, I wanted to deliver. And thankfully, a couple of my partners also agreed with that, and we developed the original concept, which is now known as ESS BIZTOOls, because we wanted to supply a range of advice to help the day-to-day financial management of our clients' businesses. And I think that is what we all need to be doing. So what do SMEs want? They were asked these types of questions in the survey as well, of course, because there were 500 of them to be interviewed. 2/3 wanted accountants to recommend on fintech matters. They wanted to understand what's going on in the technology markets, because technology continues to reshape the accounting professions, with more than 2/3 of the SMEs wanting their accountants to recommend financial technology solutions. Is your firm doing that? Have you got someone that can give them advice on the latest software, the latest products, on AI, for argument's sake? Now, I must admit, none of that is my high-tech point. So in my firm, I would definitely have to have someone who was more attuned to those products. But accountancy firms are being called upon to supply those services, according to the survey. So all of this technology is reshaping expectations and values that SMEs are looking for. Forward-thinking advisors help navigate uncertainty. That's one of the responses that SMEs were looking for. They know it's a jungle out there. They know the failure rates are high. They know that interest rates are high, even though in my career and some of your careers, we've seen interest rates go substantially higher than what they are at present, but it's all relative. I was around in the 1989, 1990, 1991 period where interest rates were at astronomical levels based on today's rates. And a lot of businesses got into difficulties. Your clients are looking for advice, not just once or twice a year having a discussion. And Eddie Salvatore is really saying we need to dig into what's going on in the business. And that's what we call the knowing your clients 1 inch wide but a mile deep. There needs to be a greater understanding of what's going on. There needs to be a challenging role, very similar to what I'm sure you would play if you were the employed chief financial officer of one of your clients. I was in that role, and it was quite challenging, and at times I found I had to take a position. The CEO didn't agree. I think I converted him on about 70% of issues. There were a few I didn't. One of the reasons I ultimately changed my career. And unfortunately, history proved I was correct, but that's another story. Stress reduction and impact was also a major item discussed in the report prepared by Intuit. Because of the heavy issue of compliance work, the SMEs gave it a high rating of anxiety lessening by going to an accountant. 48% said they had less anxious moments after talking to their accountant on their tax returns. But the survey asked the participants to comment on other areas also. And 33% were happy with greater confidence in the accuracy of the financial reports. Decision clarity was a very important issue, clarity over your decision making, which they could discuss with someone. Better cash flow and financials, 21% believed that their stress levels had been reduced because they were able to discuss that. The growth profit uplift was also identified as an item. But 18% saw no change in their stress levels from talking to their accountant. Now, I find that a bit of a problem. 18%. So that's about 90 people, isn't it? 90 firms, businesses saw no reduction in their stress levels. So that's worth thinking about also. But only 26% of those 500 firms actually engaged in any aspect of advisory services. That's leaving this huge market of unserviced. And in the management accounting chief financial officer area, only 16% had any involvement in that. It's worth looking at what some of the uptakes were because they're identified in the report. Performance reporting and forecasting, 9%. Business and strategic planning, 9%. Now, this is a 500. This is a snapshot of the Australian small business community. So 9%, so it's 45 firms. Cash flow management, 9%. Outsourced CFO type services, 6%, so 30 of them. Tech and data planning, 7%. Wealth planning, rated at 13%. That was financial and wealth planning. Succession issues, only 4%. Succession's an enormous issue in Australian small businesses. We've got a major period of people retiring from their businesses, and yet only 4% of that 520 businesses identified that they had been seeking advice from their accountants on those issues. Estate planning, 5%, and mergers and acquisitions, 3%, so 15 firms. I think there's a lot more work in that category, that overall category of advisory uptake that could be looked at. Let's look at the fees and perceived value. 74% of the SMEs spent less than $5,000 per annum on accounting services. And in the report, that figure's been broken down into categories of taxpayers, from fees ranging from under $1,000 per annum, then $1,000 to $2,000, and so on. It's interesting that 8% of the category paid fees of more than $50,000 per annum, and 12% paid fees of somewhere between $10,000 and $50,000 per annum. So in my opinion, some accounting firms were getting it right. They were providing the services and then they were getting paid for those services. I've had people say to me, oh, you can't get the sort of fees that make it worthwhile. Well, we've got a few of our subscribers who share this information with me, earning over $130,000 per annum from individual clients for the supply of a virtual CFO type service. There's clients prepared to pay the fees if there's a discussion with them and they understand it. Maybe earlier I mentioned the definition of a strategic partnership, and the firms that were classified as a strategic partnership, and let's revisit it. They are a key partner in our business. This is what the SMEs have agreed to. Key partner in our business and our go-to professional advice. And they are extremely valuable to our business growth and success. They were very happy, those people. They rated the supply of services they received from their accountants at 84% of them were satisfied who were receiving that service, according to the report. There's no doubt that the higher fees correlate with the strategic partnerships. That's where the higher fees were paid, because they were receiving the services. I can't explain it any clearer than that. If you provide the services, you communicate with your clients, you're available to listen to them, they accept you as their strategic partner, the fees can be quite high. We asked the survey by Intuit QuickBooks asked the accounting firms to analyse what they saw happening in the next 12 months. And I will give you a bit more information on that. So the high growth type firms saw that occurring at 14%. So high growth was defined in this survey as planning to significantly expand our client base through a combination of organic growth and acquisitions. So 14% of the 400 accountancy firms indicated that was what they were trying to achieve in the next 12 months. So if you're looking around and wondering what your competitors are going to be doing, 14% of that group, which is a fairly high group of people, group of firms, are out seeking high growth. %53% of them identified growth. Now, growth was defined by QuickBooks as plan to expand our client base moderately with client retention and organic growth through advertising, referrals, or other activities. 53%. And the last group was conservative. Plan to keep our client base relatively consistent and will not seek out any direct growth opportunities. 30%. I'm a bit amazed that 30%, 120 of the firms would identify that they're not going to seek out any direct growth opportunities in the next 12 months. We've got a high rate of business failure in Australia. As I said earlier, the Ombudsman's saying it's the highest it's ever been. There's natural changes occur in firms. I personally would not subscribe to a conservative approach for the next 12 months. Businesses need to grow, I think. I'd be interested if any of you have got views on that, of course. Let's look at, in a bit more detail, at the accounting firm growth that they summarised. The micro firms, 1 to 4 partners, they indicated that 7% see themselves in the high growth, 49% in the growth, and 44% in the conservative. Now, I know some of you will be looking over these figures and identifying where the market opportunities are. Small, 5 to 19 employees, 12% are looking at high growth, 62% at the growth category, and 27% conservative. The medium to large firms, 32% in high. This is why they're medium to large firms. They're always looking for the opportunities in the marketplace. 55% are signing up on the growth area and 13% on the conservative, which I find a bit surprising, but they are the lowest in that area. You need to think this through, I think, if your firm's rating itself has been conservative in these types of statistics. Technology recommendations. You recall that early in this presentation, I indicated to you that technology continues to reshape the accounting profession, with more than 2/3 of SMEs wanting their accountants to recommend financial technology solutions. Technology recommendations, 37% of the SMEs said that they'd received tech recommendations from their accountants. 83% of them said 83% of the 37% adopted the suggested solutions. This is obviously a clear lever for value and stickiness, whereby supplying those services to clients will help them keep in contact with you and hopefully rate your firm at one of those higher level of service providers. So let's look at this question of the trusted advisor myth. Is it a myth or is it the real thing? Because it's coming up for, some debate. The problem is that the tax relationship is not enough to keep accountants at the forefront of clients. I think SMEs need an input at least monthly from their accountants, in some cases weekly, although the emphasis should be on setting up a weekly performance report and profitability report that your firm monitors rather than actually goes and prepares. But you need someone in the client's firm to do it. Because one of the big difference between larger businesses and SMEs is that the larger businesses know how they're going. They know week by week. I learned that when I joined a public company. Hundreds of operations, yet by every Tuesday, each one knew the result up until the previous, in our case, Saturday, end of trade. And those groups of businesses include 4 very large meatworks, which were processing products for the international markets, retail butcher shops, small goods factories, and a range of other activities. Woolworths and Coles and IGA stores all know their results by department within 1 to 1.5 days after the end of a week. The big end of town know their results. It's the big difference between SMEs. And the drivers of knowing those results in the big end of town is primarily accountants who have set up the system and in many cases actually prepare the results. That's the service, I think, that we need to provide if you're going to be viewed as being the trusted advisor. It's important to build deep engagement and context with your clients. This was a comment from Eddie Senator, who said, you build contact through deep engagements where accountants spend time understanding their client's business, their goals, their ambitions, and specific challenges they face. You need to sit down and talk. Your client needs to understand that you're interested in these aspects. That's why in the ESS BIZTOOLS, one of the most important documents we prepare is the SME needs analysis. This was originally prepared by Andrew Geddes, one of the joint founders of the FMRC, Financial Management Research Centre, that was originally at the University of New England 45 years ago. And this was basically dot points on comments that you could have with your client to get them talking, to get them to understand that you have an understanding of debtors management, cash flow forecasts, developing a business plan, developing succession strategies. This is what's important for your client. Sure, they want to know how much tax they got to pay, but the tax return does not help them run their business at all. And the financial accounts that come with it, in most cases, they're far too late. One of my accounting colleagues told me the other day that he's got extensions to the end of September for 2024 tax returns. So there's businesses out there that still don't know how they performed. It's too late to be using that data in any shape or form to manage their current business operations. I think we need to face up that there is a tremendous opportunity, and I think also obligation, for accountants to wholeheartedly supply a greater range of services to SMEs. And some people say to me the clients won't pay for it. Well, I don't think that's a valid point until you've actually talked and communicated and presented a program to your clients. Because some firms are getting the fees. I've told you what some of our subscribers are getting, and you saw those results before of that percentage over the $50,000 fees per annum. Firms are being paid for the services. But we need that deep engagement. ESS BIZTOOLS also produces a newsletter each month. We call it Business Plus. I write it. I communicate with our subscribers, but I also listen very closely to what SMEs are saying that I come across in my consulting business, or I run into at the golf club or at the club or somewhere and just start talking and find out what's of concern to them. And I invariably say, if you discuss this with your accountant, and the reply I get in 80 to 90% of times, oh, they're too busy doing tax returns. They haven't got time. And yet the client had a worry about a succession issue or his debtors. Fewer clients, more tailored services is what Eddie Senator really recommends. He thinks you've got to reduce the size of your client base to increase the fee revenue you're generating, because you'll be offering more services. Andrew Geddes has been saying the same thing for the 40 years that I've known him. Fewer clients, more tailored services. And incidentally, that will also help in your talent attraction and retention, which is an enormous issue for accounting firms. Senator also says, face up to the issues with your client. Don't put it under the rug. Address issues earlier. And to do that, what Eddie Senator is saying in his articles, you have to be communicating with your client as their trusted advisor, because you've analysed the figures, you've asked the questions, you've done some digging, and you're able to sit down over a cup of tea or coffee, or maybe a glass of wine if that's more appropriate, and discuss the issues with your clients. I always do those interviews in the client's premises, not in my office. I think clients get intimidated coming to accountancy firm offices. Maybe this whole concept of more and more people working from home will create more of that out-of-office type consultations. But when they're in a city office, I think half their mind's on the parking inspectors and how long all this is taking, what's going on back at the workshop or the office or shop or whatever the business is. And Mr. Senator made a comment about being prepared to ask some humble type questions. And that's meaning that you're in communication with the clients and talking to them about what the problems are. Discuss with them the debtors' days outstanding. Ask them, do they know that it's currently sitting at 53 days outstanding? Ask them if they're happy with their gross profit percentage in their retail operations. And then suggest you might be able to assist them to change. Ask them how they set their charge out rates for their tradies. Do they just guess a figure or copy it off what they heard someone else was charging? If you're a subscriber to ESS BIZTOOLS, you've got access to our highly rated tradie charge out rate calculator, which will give you the charge out rates geared to the productivity percentage of the various team members or categories of team members. And then you can monitor it month by month to see how it's all going. There's a one-way test I think you should look at. If the year end vanished, would your client stay? It's a serious question. Mr. Senator basically asked it. He called it the one-way test. To find out if you're really the trusted advisor, ask your clients whether they would still have a relationship with you if overnight the government announced that the tax office was no longer requiring tax returns to be lodged. What do you think the answer would be? How many clients would stay with you? And in these days of AI and all the other new technology that's coming along, is that such a way out type of question to be asked and be considered? It mightn't directly concern my generation, but it could be of something that's going to become a reality in the future. True advisors are retained for decision support. That's what your clients need. They're needing support in the decision. And you need to be, I think, looking at your client's reaction against some of the others that we've briefly summarised in this report, but I'd suggest that you log on to Accountants Daily and download a copy of the Intuit QuickBooks report, which is very interesting. And then start asking some questions. Maybe do your own survey of your own clients. You could get a consultant to handle that for you. Won't take long. Just send some survey forms around to your clients, ask them to complete it. So what's the gap? What action do we require? How are you going to move from transactional to more advisory-based work? I think you need a rhythm of meetings. Your clients need weekly performance and monthly boards to give them reports back on how they're going. They just can't wait a year to get the results. All businesses need cash flow and predictive accounting reports, budgets, cash flow forecasts, key performance indicators. And they need to understand how those figures were calculated. If you haven't read the report that was published about 14, 15 months ago, quoting the managing director of MYOB when they had undertaken a survey of 1,000 of their members, their customers, it's worth reading. People were going into business assuming that they had to give anyone that wanted the credit account, give them the credit account with no prior search has been undertaken. Some of those people assumed that everyone would pay them in 30 days if they gave them a credit account. Some people were assuming that all suppliers would automatically give them 30-day terms. And we know that didn't apply. So what the MYOB report was leading to was a significant number of that 1,000 firms had problems in their business 6 months after they started its operations because they ran into problems with the tax office, because they had assumed that everyone would pay them in 30 days, and they didn't. They probably had debtors' days outstanding of 40 to 50 days, and hopefully no higher, but they might have been. They assumed that suppliers would automatically give them 30-day accounts, and to their horror, a number of them found that they were put on cash for about 6 months until they proved their relationship was worthwhile. And they tended not to pay the tax office superannuation and tax deductions from employees' wages, etc. So after 6 months, the tax office got a little bit annoyed and caused problems for them. I think you need to be proactively recommending an implementation strategy with your clients. It's important to market your advisory offerings clearly to clients. Hopefully you've decided to adapt and improve your advisory services. But what percentage of your overall turnover are advisory services generating at present? Now, some people ring me up and they talk about 5 to 10%. I said, I think your aim should be 50-50. 50% from advisory services, 50% from taxation advice and tax returns. And if that means you're dealing with a lesser number of clients, is that a real issue? If you're getting increased fees out of the whole process? Where firms are shifting focus was identified in the QuickBooks report. Biggest increase, outsourced CFOs. Firms are offering that service. I was talking to a young accountant the other day who's splitting his time. 3 days he's doing outsourced CFOs and 2 days on taxation and a couple of minor clients. There are people looking for this service. There's a lot of small businesses out there still trying to grow, trying to scale up. They need accounting input. Business strategic plan. Firms that were part of this survey have identified that 78% of them are going to offer business and strategic planning. Performance reporting, 76% of them. But tax and bookkeeping still matters, but growth is lower. And if you go back and analyse what Chris Jordan had to say 3 years ago, he obviously expects the reliance on tax and bookkeeping, especially at the bookkeeping and very small accounting firm areas, to decrease quite significantly from now for 24 months. In the Intuit report, they identified the services that they believed the accountants were providing. And what we have done is gone through and looked at it. So first of all, on the screen, you've got strategic planning. That was identified by the accountants. And we've then recorded the products that we've got in ESS BIZTOOLS to help you do strategic planning. So we've got a product which we call Know Your Clients, and obviously business planning. Performance and forecasting. We've got predictive accounting reports, which is budgets, cash flow forecasts, projected balance sheets. 52-week business enhancement system. This is this concept that your clients need to know week by week. You should set the system up for them. Key performance and business metric reviews. Cash flow is one of the services. We've got improvement of strategies, lender packs, cash flow monitoring. Succession and estate planning is mentioned. We've got succession manual and valuation tools. Outsourced CFO. Well, we've got a range of services there. Corporate governance, board of advice, board of directors, virtual CFO services. Goes on for pages. Funding and wealth. We've got capital raising, crowdsource funding, equity raising, a detailed manual, A to Z, to help you get clients as long as their turnover is under $25 million and their gross value of assets is less than $25 million, both those figures worldwide. They could raise up to $5 million in 12 months and repeat it again in the following 12 months. There is a process, of course, and there's some red tape, but about $440 million has been raised from companies raising capital in that manner. I think there's a lot more opportunities there. Government grants. There's a lot of support from the government. Research and development, a great activity. So what percentage of your clients see you as a strategic partner? I'm sure you've got a pen and a piece of paper near you now. Please write it down and think about it. What advisory offers are under-communicated? Do your clients understand them? If you recruited me to make some contact with your clients, what response would I get when I talk to them about capital raising or research and development or succession planning or the personal property securities register? Just to mention a few. I think your clients should be at least able to say, oh, yes, we see some material on that coming through. Do you run a consistent rhythm of meetings with your clients? Are they having a process daily, weekly, monthly? Andrew Geddes, who will be talking at our podcast, which we're running post this event tomorrow afternoon at 4 p.m. You can register. Just go to our website and come along. And if you've got any questions, send me an email, please. peter@essbiztools.com.au. But Geddes for 10 years was the chair of Green Cross Limited, which was a public company in the top 200 ASX that grew from a small veterinary clinic in Townsville into a nationwide business. Geddes originally advised the CEO of Green Cross 35 years ago, so he always had an ongoing relationship. But he talks about in some of our webinars, the rhythm of meetings has been vital for the communication. Might only be 5 to 10 minutes every day, but find out if there was a problem yesterday that someone else needs to be involved in to get it fixed, and then the weekly meetings to look at the results for the week, and then the monthly financial review. And the process gets repeated again. Do you recommend the implementation of new tech for your clients? So if you want more information, please go to our website, www.essbiztools.com.au. If you want to look at the packages that ESS BizTools has, just click onto packages as I'm showing you on the screen there now. And we have complimentary Zoom meetings that you can watch on the various services that we provide. Just send us an email, peter@essbiztools.com.au, and I'll be happy to talk to you and analyse what I think your firm should do to get on board, to implement real advisory services, financial, commercial, management accounting, advisory services to help your clients survive, thrive, and if they wish, scale up their business operations. Or you can give me a phone call, 0418 190 181. Now, the podcast I just mentioned, I got in front of myself. That's on tomorrow afternoon at 4 p.m. AEST. I normally produce a podcast each week for Accountant's Minute, which is our weekly public relations release. And if you want to be on it, please register and you'll get it automatically each week. But tomorrow afternoon, I'm joined by Andrew Geddes. And we're going to look at what we've discussed today in this webinar. He'll be getting the tape. We will be sending it to all of our friends who are on our mailing list. But we'll analyse it and I'll get Andrew's input. You can submit the questions, as I said before. Just send them through to me. Thanks, peter@essbiztools.com.au. So thank you for being with us. If you have any further questions, please don't hesitate to contact me. I really believe that as a profession, we have this challenge to meet the requirements of the marketplace. I think there's great opportunities there. When I read some of those percentages of people supplying the top level services and then what is shown as the others, and that key category of key strategic partner, I think it should be a lot higher. It should be over 50% at least on an overall SME basis, not 15%. Thanks for being with us. Have a great day. Goodbye. and I look forward to hearing from you. Thank you.